What's going on, traders? Pat here. Hey, today is November 2nd, 2024, and this is a review of my last 2 weeks. I wasn't around last weekend to do a review, so I'm just going to review the last 2 weeks. This is my equity curve for my eval account, and as you can see, we made a high right about there, and then not this last week, not the week before, but the week before that, we kind of took some of that out. And then last week I had a big losing day on Tuesday, had kind of a small losing day on Monday. I think we started the week right here, Monday, small losing day, and then big losing day on Tuesday. And then we've been kind of chopping sideways since then. So not much to say about this. I mean, it's basically a boom and bust curve, not super proud of it, but that doesn't really matter. What matters is that if you have a model and you follow that model and you go back and you look at your trades and you see if your trades actually follow the model, and maybe you can learn from them and look at maybe some mistakes that you might have made or some misreads that you might have misread, and you just get better. So I'm going to take a look at this day right here. This is October 22nd. And I took two losers that day. It was, you can look at my shorts, it's a big $452 day. And let me go on over to NinjaTrader and just kind of look at the trades that I took. And here we are in NinjaTrader. This is a 1-minute chart. Just to set the kind of the context of the day. We ended the day prior right around here. This two red lines is a new day opening gap. And we kind of chop down, had a little bit of an up, and then chop down some more. When I see this right here, I look at that as engineered liquidity. People are rolling their stops down, and this oftentimes gets run. And so as you can see, we did start to run it right here. We ran up most of it, and then retraced during the lunch hour, and then ran it up the rest of the way during the afternoon session. The first trade I took was this 1-minute inversion right here. I liked it because we had all that engineered liquidity that I showed you right there, people rolling their stops down. This met the model. We had a nice fair value gap right here that we tapped into, and then we inversed this 1-minute fair value gap right here with a really nice momentum. So I entered right here looking to take partials at the high. So this one went up, down, and then stopped me out. As you can see, it stopped me out by about a tick on this one. And then I think what happened was once it stopped me out by a tick, I usually wait and see if it like wicks down and go back up. And I think this one probably faked me out with a big wick down. So I took a larger loss than I probably should have. Should have just stopped out right there. What could I do differently? Well, if you look over on the 2-minute chart, we still have that fair value gap on the 2-minute chart. It's a little bit bigger. And this 2-minute candle is the 1-minute that I entered on. So we really don't get an inversion on the 2-minute. So it's good to look at the higher time frame, because the higher time frame is the parent to the lower time frame. And the lower time frame is not going to drive the higher time frame. The higher time frame is always going to drive the lower time frame. So watching this, I probably would have waited for a 2-minute inversion, and this wouldn't have been a bad 2-minute inversion to take if I would have entered on this bar right here. But we kind of have it wasn't like really nice strong momentum through there, and it would have been a little while before it would have made that happen. I did like the timing though. We're at 6:55. We're within the 950 macro window. And you see the 950 macro actually delivers pretty nicely between 950 and 710. It does a little manipulation, and it rolls up and takes that liquidity up there. So I mean, this was a reasonable trade. It was a reasonable entry. I don't have 2-minute charts on my phone, so this was just one of those unfortunate things that it was really a good read, but a good loss as well. Second trade I took was this inversion right here. I'm still looking for us to reach up here into this new day opening gap to take out the high, and we're delivering out of this fair value gap right here. and we inverse this fair value gap with momentum, and it completely stalls and stops out. This one was outside the macro window, so that's what it had going against it. But also, you know, if you this where it's important to really consider the higher time frame narrative, and that's something I didn't really check is what is a higher time frame narrative telling us. So first thing we can see is, let me just zoom out here. I'm expecting us to go from down here. I'm expecting us to take out all this liquidity up to right here. So right here I have a range. That's my range right there. If I zoom into this range, I see that I've got this blue line right here. This is a midline of the range. Anything below the midline is discount, anything above is premium. It's always higher probability, if you think the market's going to go higher, to buy in discount and to sell in premium. So this first trade was actually just slightly in discount when I took it, but the second trade was definitely not in discount. The second trade was in premium. So anytime you long in premium, you're kind of taking a risk. You really need the market to run up there, and we're outside the macro window, so we could be chopping. Now here's what I mean by higher time frame narrative. If I go over here and I look at the 4-hour chart, what I'm seeing here is I'm seeing here's October 22nd. There's a range that we just made. There's a new day opening gap, and there's a trade I marked, the first one I take. But I'm seeing that we have this dealing range that we're working with. It's from this high to that low. Okay. The trade I took was very close to being in discount on the higher time frame. The second trade I took that lost was already in premium on the higher time frame. But look what we also have going on is we have this low, we've got a higher low, we got a higher low, we got a higher low, a higher low. This is all engineered liquidity. And on that 4-hour chart, let me get rid of this. What we see is that we take out this old high just by a tick. That's a daily high. Take out the daily high just by a tick, and we inverse this 4-hour fair value gap right here. Get rid of the range. And when it closes below, that is my model. I look for a liquidity sweep and a delivery from a fair value gap. This one doesn't have the fair value gap delivery, but it definitely has the liquidity sweep, and it has the inversion right after that. And this runs all that low resistance liquidity. And it's from a premium. Actually, here we're in discount in the big dealing range. But if we're considering this new range right here from that low to that high, that is selling at a premium, and it runs a low resistance liquidity. So that's not something I was really paying attention to. It's something you see after the fact. And with trading is really, really hard to do, because you're taking in so much information, and you're trying to process so much information at once. And you know, for me, like, I'm flipping through charts, and I'm trying to put together higher time frame narratives. And this is something I didn't really look at. I didn't look at this higher time frame narrative, and I didn't see that. You know, we're really just trading inside this dealing range right here. And anytime you're trading inside a dealing range, prices tend to chop. But that's kind of the mistake I made on that second trade. It was that I was buying in a premium, and instead of buying back in discount. Now, really good trade, had I been around for it, is, you know, from here all the way down into the lunchtime. Like I showed you on the 4-hour, we start getting this lower high, this lower high, this lower high, lower high, lower high, lower high. That's all low resistance liquidity that can be run. So if I'm over here on the 15-minute, this is the first trade I took. That's the second trade I took over here. What we see is we still have this engineered liquidity coming down there. We notice that we didn't quite take it out. Our narrative tells us we're probably going to take the rest of it out. Lunchtime is retracing. Where the heck is lunchtime retracing back to? and my eye is drawn to this fair value gap right here on the 15-minute. So this is something I'm starting to do more often now, is when we have a higher time frame narrative of where prices are likely to go, I'll look for these fair value gaps in the run up, and I'll look for prices to retrace into those fair value gaps, because I'm looking for it to rebalance there so that it can reject off of there and use it as a springboard to get up to the liquidity where I believe prices are going. So this is that 15-minute fair value gap. We just tap right into it, and let's see what happens on the 1-minute chart right there. This is the 15-minute fair value gap. So we have fair value gap delivery on a higher time frame. We have a really nice inversion right here. It's right at 9:50 Pacific time, so that's 12:50. That's the end of the hourly candle. It's a macro window, and this is a really nice run up. Perfect setup, something that I would have taken. And this actually ends up running all that engineering liquidity, and finally hitting up here to the previous day high. So those are my 2 trades I took on that day, and just kind of what I'm learning from them. Biggest takeaways is buy in discount, sell in premium, and then don't really mess around in the middle. And because I'm still learning this stuff, like I try not to worry too much about the equity curve going down or up. Obviously I want it to go up, but if it's going down, that's telling me that I'm not reading something in right. I need to get more. So it's good to go back and review those things. So that's my takeaway from the week. And then the choppiness in here, I'll have to go back and look at those trades, but I don't want to bore you with that. And look at my demo account. Made a new high on my demo account. You can see my demo account's been chopping sideways too for the last several trades. I say I take it seriously, and I do. This upward curve gives me all the confidence in myself as a trader. But this performance in here is not very good, and this is indicative of trading outside the model. So not all these trades were 100% my model. They were just kind of where I thought liquidity was, and based on macro times and such, and seeing if the market would get to that. A few of the nice ones in here, a few of the nicer run-ups, those are trading the model. This last run-up, that's not trading the model. That's a 350 macro. And obvious liquidity, so I was able to kind of make up the range from there. But hey, made a new high there. 110,709. Looking to break 111,000. I'm sure if I and again, these are all one mini, and if I can do that, I can probably hit the 111,000 mark at some point. But anyway, that's my review of the last 2 weeks. Definitely got some things to work on. A little embarrassed to share it, but hey, that's trading. Trading's hard, and if you want to get better, you got to review. So hope you like that. Take care. We'll see you on the next one.